Well, it was a tough day for investors. The market breadth was obviously lopsided. Both the New York Stock Exchange and NASDAQ saw 580 advancing stocks. This against more than 2,400 declining stocks. Volume was even more worrisome. Down volume outpaced up volume, 10-1 on the New York Stock Exchange, more than 5-1 on NASDAQ. So a rough start to the second quarter. The Dow at one point down 700 points before the buy on dips crowd finally emerged. Still, the selling carnage was felt in every sector of the market. Now, key themes were uncertainty and negative speculation over the unknown, things that may or may not happen. Yeah, that's right. Once again, headlines triumphed over real-life developments and trends. Amazon taking the biggest one-day point drubbing in its history just after President Trump weighed in on its uneven deal with the U.S. Postal Service, which belies the notion that that there's little the White House can do about the retailing giant. I mean, the stock wouldn't have been down this much if maybe the White House didn't have some leverage. But that being said, I still think the stock is oversold, and I don't think a lot will be done, including even a big internet sales tax. Meanwhile, Facebook continues to get hit in the aftermath of its privacy fiasco that has Mark Zuckerberg saying it could take years to overcome. It remains to be seen if Zuckerberg is being too cute with his comments, from more regulatory oversight to the depths of the damage done to the company's reputation, but I think he might want to be quiet for right now. Big losses in tech all over the place. In fact, semiconductor stocks, which have been on fire for most of the year, getting slammed on reports that Apple might produce its own computer chips for Mac products by 2020. Intel was the biggest percentage loser on the Dow today. And I got to tell you, I think the selling was excessive. And that was underscored by a late report from Stifel Nicolaus, which points out that Apple is less than 1% of profits in Intel. As for the trade battle with China, which intensified today, there's no doubt it took a toll on retailers, which could be hit in the next salvo, which probably would include consumer items from clothing to electronics. That's why shares of Walmart, instead of popping on that news for Amazon, actually had a pretty bad session. And there are other products that we export to China, including aircraft and construction equipment, that could fall victim to an accelerated tariff battle. Shares of Boeing and Caterpillar both off on that speculation. Although not large percentages, it's unlikely they would be dragged into such a trade battle fray unless all was lost, all hope was lost. Now, I continue to believe that there's going to be a last-minute deal with China, which knows how high the stakes are and how little room there is for error, given its grand ambitions in its ghost cities. The S&P 500 closed at 2581. That's the same exact level as February 8th, before it had a strong rebound, almost 8% back then. Of course, we are getting to the point, though, where charts could become useless, as overall bias is clearly to the downside, and there isn't a lot of news that could stem the tide between now and that jobs report on Friday. I say continue to reevaluate your portfolio, but try not to make assumptions when, in the long run, it's all about facts and fundamentals that will determine share price. Keep that in mind.